One respect in which this share sale is a disaster is that the timing and price of the sale, which the Chancellor of the Exchequer has chosen, means a loss to taxpayers estimated by his own advisers at £7 billion. The taxpayer has been given no justification for this, and I believe the NAO should look into it. So I have written today to the Controller and Auditor General. Before the sale, the Governor wrote a 2-page letter to the Chancellor of the Exchequer, which said selling the shares would promote financial stability, a more competitive banking sector, and the interests of the wider economy. The Chancellor has relied heavily on this. I asked the Governor about it on the 20th of October at the Treasury Select Committee. He said twice, the timing and valuation for the taxpayer are entirely decisions for the government. He also told us that his letter was based on analysis by the Bank of England, but he refused point blank to disclose this analysis. I'd like to know today whether this analysis was passed to the Treasury. Madam Deputy Speaker, I find this failure to disclose totally unacceptable, and I hope the Controller and Auditor General will be able to recover the information when he assesses the value for money of this share sale. The Rothschilds document, which I have to say is one of the thinnest and weakest papers I've ever seen, at no point quantifies the benefits to the public of the sale. Therefore, of course, it may be that there are some benefits to financial stability in the banking sector, which are worth something. But how much? We should be told how much. I put it to the House this afternoon. Ministers have been lobbied by their banker friends and funders in the city, and this is why they're selling off the shares cheap, rewarding their cronies and cheating the taxpayer. Secondly, the government has said repeatedly that they want to improve behaviour at the banks, and in statements to the House in February, ministers repeatedly told us that tax evasion promoted by the banks via Swiss accounts is a thing of the past. RBS has 404 company subsidiaries located in tax havens. Evidence uncovered by The Guardian but not yet published in relation to Coutts, a subsidiary of RBS, show that this practice has continued in all 5 years of government ownership. Alerted by a whistleblower, they met a senior manager at Coutts, incidentally chaired by a Conservative peer, Lord Douglas Hume. The manager offered to park undeclared money and help move a potential customer to Switzerland in order to avoid tax. During the meeting, the executive was recorded saying he would accept a deposit worth 8 million Swiss francs on which tax had potentially been evaded, accept funds without ensuring the money was not the proceeds of a crime, help a client pay as little tax as is legal, help a client move to Switzerland to avoid tax. This executive is a British national who ran a private banking team at Coutts International head office in Zurich. He was recorded saying, basically, tax authorities are your enemy. Furthermore, these facilities, these opportunities were advertised in a brochure by Coutts, and they were, until The Guardian got in touch with Coutts, on Coutts' website. So, although under Swiss law tax evasion is not a crime and there's no obligation to report it to the authorities, in England it is illegal for a banker to deal with money they know or suspect to be the proceeds of a crime. When the head of the UK Financial Investment came to the Treasury Committee, I asked him about this as well. I asked him if he had concerns about Coutts. He said, yes, we do. And he went on to say that the controversial practices were one of the reasons for selling Coutts International. He also said he had kept Treasury ministers regularly informed of every contact item they found out about. So it would appear that once Treasury ministers were told, instead of attacking these malpractices and stopping them from taking place in Coutts, the government decided to wash their hands of it by selling the shares. Taxpayers will want to know, when were ministers told about this tax evasion? What did they do? What estimate was made of the tax losses? Did the Treasury ministers or Treasury officials alert HMRC to the practice in order to recoup the lost tax revenues? Why did the minister tell the House that the era of mass market avoidance schemes was over? And can we have a systematic review of the 404 RBS subsidiaries located in tax havens? I submit that until we have answers to these questions, there should be no further sale of RBS shares.